Okay, I want you to start by picturing any truly successful enterprise you know, like a big company, a fast-growing startup, maybe even an elite athletes team.
Right. None of them operate in a vacuum, do they?
Exactly. They all have this formal strategic setup, a board of directors, advisors, coaches, people focused on guiding them, maximum direction.
And that systematic structure, that's really the bedrock of success for organizations. But, and this is kind of wild, when you look at individuals, even really high-achieving ones,
It's a totally different story.
completely, that's the shocking gap we're diving into today. Almost every ambitious person is trying to reach the top through, well, what our research calls solo navigation.
Flying blind, essentially.
Uh,
Reading books, maybe taking courses.
yeah, but lacking that direct, experienced, really tailored guidance for their specific complex situations, they hit a wall.
And the cost of going it alone, it's actually measurable. The sources point out something staggering, like 97% of high potential people, they just don't systematically build what we're calling a personal advisory board, or PBOD for short. hmm And let's be clear, this isn't just, casual coffee chats with mentors.
No, it's structured,
Yeah.
strategic, like building infrastructure for your own career and life, aimed at nonlinear growth.
And the payoff for doing that, well, that's why we're really digging into this. There's some compelling research from Harvard's Kennedy School. It clearly shows that people who do set up and use these systematic advisory relationships, they advance 67% faster in their careers.
67% faster.
Yeah.
Just pause on that for a second. That's almost doubling your pace of progress professionally.
It's huge acceleration, but there's more to it.
Yeah, the life quality metric you mentioned earlier, that
Mhm.
really caught my eye. Beyond just the career stuff, these people report 89% higher overall life satisfaction.
89%. It's not just about promotions or making more money, is it?
No, it sounds like it's about cutting down on the stress, the friction, the anxiety that comes with making big, complex decisions alone. Absolutely. It's the difference between, say, trying to climb Everest with a map you found online versus having an experienced Sherpa guiding you every step of the way, showing you the safest, fastest route.
Great analogy. Okay, so our mission today is pretty clear then.
Yep, we're unpacking this personal advisory board system. It's a comprehensive, step-by-step way to cultivate guidance that gives you compound returns in wisdom, in opportunities,
So transforming that linear effort most of us put in.
into accelerated gains, showing you how to systematically compress, like, decades of learning into just a few years.
Oh, okay, let's get into it. Let's unpack the system and see how Maya, our case study, actually broke free from that 97% solo navigation trap. Right, let's start with that fundamental mistake. The solo navigation mistake. Our sources introduce us to Maya. She's 31, a director of marketing in fintech competitive field.
And she's good at her job. Really
Yeah.
good. Highly valued, hardworking, a master of her specific domain.
But she'd hit that point, that strategic crossroads that so many people hit, right?
Yeah.
Maybe late 20s, early 30s.
Exactly. She was excellent at doing things, at execution. But when it came to the big picture, the strategy,
Paralyzed.
pretty much. Like, she could run marketing campaigns brilliantly, but mapping out how to get from director to CMO in a regulated field like fintech,
Mm-hmm.
or figuring out how to actually invest her savings systematically.
She was relying on.
Trial and error,
Hmm.
business books, maybe some online research, general stuff.
And she knew she needed specific guidance, right? She had this idea for a side business, a niche consulting firm.
Yeah, fintech compliance marketing. But no real plan for how to launch it. And critically, she wanted to move from her stable job to something with more equity upside, maybe a startup.
But no framework for assessing the risk.
None. And her network, this is key, it was mostly peers, people at her level facing the exact same problems.
So they could sympathize, but not really offer solutions based on experience.
Precisely. She was swimming in generalized wisdom, but starving for tailored advice from people who'd actually navigated her specific complex challenges successfully.
It's like reading a textbook on brain surgery versus having an experienced surgeon guiding your hands during a real operation.
Exactly that. The stakes are high, and the general knowledge just doesn't cut it.
Okay, so this isn't just Maya's story. There's solid research backing this idea up. You mentioned Professor Brian Uzzi at Harvard Business School.
Yes, his work is foundational here. He led this huge study, tracked 3,500 professionals for 15 years. 15!
Wow. And what were they specifically looking at? Not just mentorship in general.
No, that's the crucial part. They were analyzing the structure of people's advisory relationships. Uzzi found the top performers didn't just have mentors in their field.
They had relationships across different areas.
Yes, strategic advisory relationships across multiple life domains, finance, maybe health, business strategy, their career, obviously.
In this conclusion.
Unequivocal. This structured, diversified advisory network led to significantly better outcomes. We're talking faster career advancement, better financial decisions, wealth accumulation, and even just higher reported life satisfaction.
And the fact that it was a 15-year longitudinal study is important, right? It wasn't just the snapshot in time.
Absolutely. It suggests this isn't just correlation, it's likely a causal factor. Structured guidance seems to drive accelerated success over the long term.
So moving from solo navigation to this systematic guidance offers some clear benefits. The sources seem to group them into three main categories.
That's right. Three powerful advantages.
The first one sounds like what you called wisdom compression.
Exactly. The wisdom compression mechanism.
Hmm?
Think of it as the engine of the PBOD. Yeah. Instead of you spending, say, 5 years learning a hard lesson about startup negotiation through painful mistakes,
Your advisor, who's seen it 20 times,
gives you that decade of insight in maybe one focused 45-minute conversation. You basically get to shortcut the learning curve, skip the costly errors.
jumps straight to better execution. Okay, that makes sense. What's the second advantage?
Expanded networks and access. This is huge. Your advisors don't just bring their knowledge, they bring their network, their trusted contacts, their strategic capital.
So their network becomes an extension of yours.
In a way, yes. And this is where that nonlinear growth really kicks in. It gives you access to opportunities, partnerships, maybe board seats, private investment deals, things that are just never advertised publicly.
Access to the hidden job market and beyond. Got it. And the third advantage,
This one's often overlooked, but it's critical. High-quality accountability.
how does that work?
Well, imagine you have to present your big career move idea or your investment thesis to someone whose judgment you deeply respect, someone who's already achieved what you're aiming for,
You're definitely going to sharpen your thinking.
instantly. The quality of your preparation and your decision-making goes way up. You move past just having good intentions to having a rigorous, well-thought-out, maybe even externally validated plan.
Okay, that's compelling. Now, you mentioned something counterintuitive earlier about these relationships.
Ah, yes. This is really important. Uzzi's research and what we see in practice is that the most successful advisory relationships are not the classic mentor-mentee dynamic.
Really? Why not?
Those often tend to be a bit one-sided or they fizzle out. The power lies in relationships that are strategic, genuinely reciprocal, and built on a clear value exchange model.
So it's a two-way street.
Absolutely. You're not asking for charity or free advice. You're engaging in a professional exchange where both people gain significant value. You have to consciously earn the right to their time and wisdom.
Okay, so we've laid the groundwork. We know why flying solo often fails, and we see the research backing up this structured approach. The question now is, what does that structure actually look like, right? If this needs to be strategic, then just random networking isn't going to cut it. You can't just hope you bump into the right people.
Exactly. The Personal Advisory Board System, the PDOD, requires deliberately cultivating relationships across 5 specific, distinct domains. If you miss one, you've got a potential blind spot when a complex decision hits.
Okay, let's break down these 5 roles. What are they? And the goal is comprehensive life coverage, not just work stuff, right?
Absolutely. Total coverage for high-stakes decisions.
Okay, domain number 1.
Domain 1, the Industry Career Advisor. Think of this person as your professional compass. They should ideally be someone 5 to 10 years ahead of you in your field.
Not a peer. Someone who's already navigated the path you want to follow, especially those tricky transition points.
Precisely. For Maya, aiming for that CMO role in fintech, she identified a senior vice president, someone who'd recently made that exact jump from director to a global exec role.
And the value exchange. How does she pay for that guidance?
It was specific. She knew the SVP was focused on European expansion. So Maya offered to do deep dive research on emerging regulatory changes in the European fintech market, stuff that directly fed into the SVP's monthly strategy meetings.
Ah, so she provided actionable intelligence.
Exactly. In return, she got tailored advice on building political capital internally and identifying the specific skills she needed for that CMO transition. Direct, actionable guidance for valuable research.
Okay, makes sense. Domain number 2.
Domain 2, the Financial Investment Advisor. And critically, this isn't necessarily the person selling you mutual funds.
Right, not a product pusher.
No. This is someone with proven independent success in actually building and strategically deploying wealth. They understand things like capital structure, risk assessment, long-term compounding versus just speculative bets.
So for Maya,
She connected with a high net worth individual. This person had built and sold 2 companies in related fields and was now an angel investor focused on financial strategy.
and Maya's value offer, she's not a finance expert.
She used her own expertise. She offered to help the advisor's current investment venture with its social media and digital growth strategy. She provided tangible marketing help.
So trading her marketing skills for their financial wisdom?
Exactly. She received specific guidance on building a systematic investment portfolio and, crucially, how to analyze the complex equity packages she was encountering in job offers. High-level labor for high-level insight.
Clever. Okay, domain 3.
Domain 3. The business entrepreneurship advisor. This is essential whether you're planning a side hustle, like Maya's consulting idea, or even a full-scale startup down the line.
You need someone who's actually been in the trenches.
Yes. Someone who has started, scaled, and managed the unique chaos of an early-stage business. They understand operations, sales, cash flow in that context.
And Maya found.
She found someone who'd built a successful consulting practice in health tech compliance. Similar model, adjacent field, but not a direct competitor.
Smart. And the exchange.
Maya offered immediate value, high-impact marketing insights for their business, and helped map out potential referral partnerships. In return, she got the playbook.
The playbook?
Yeah, guidance on client positioning, how to structure pricing, and maybe most importantly, critical advice on managing cash flow in the early, lean stages. Things she knew nothing about.
Okay, 3 down. Domain 4.
Doing for the life strategy personal development advisor. Now, this one might be the most strongly linked to that 89% higher life satisfaction number we talked about.
So this isn't just about career or money.
Not at all. This person is someone you admire not just for their professional success, but for their overall life philosophy, their approach to work-life balance, their personal discipline, maybe their values. Someone who proves you can be ambitious and have a fulfilling life.
Who did Maya find for this?
She targeted a prominent executive who was well known for fiercely protecting family time, staying fit, and being involved in philanthropy, all alongside a very demanding career.
Okay, and what value could Maya offer someone like that? They probably don't need marketing reports.
Right. Maya offered relational value. She started organizing and curating these small, high-value networking dinners. These events directly benefited the advisor's business development pipeline and their philanthropic interests.
Ah, so she created valuable connections for the advisor.
Exactly. And in return, she received guidance on setting non-negotiable personal boundaries, managing energy across demanding roles, and basically the systematic structure needed to maintain well-being under pressure.
That sounds incredibly valuable. Okay, final domain, number 5.
Domain 5, the network connection advisor. This person is the gatekeeper, the connector. They have an extensive, high-quality, diverse network.
But it's more than just knowing lots of people, right?
Oh, absolutely. They need to have the judgment and the integrity to make strategic, high-leverage introductions. They essentially hold the keys to certain influential circles.
And Maya's target here?
She built a relationship with a former C-suite executive who now served on multiple corporate and nonprofit boards. Access to that level is tough.
So her value proposition had to be top tier.
Absolutely. She offered meticulous confidential research and synthesis, specifically on global economic trends that directly helped this advisor prepare for their various board meetings, high-level support work,
And the return.
strategic introductions to people Maya could never have met otherwise, and crucial context-setting insights about executive opportunities that weren't publicly listed. Access.
Okay, so those are the 5 domains: industry, financial, business, life strategy, and network.
But the real magic, the thing that makes this a system, and not just 5 separate mentors, is what we call the advisory board integration effect.
Meaning how they work together.
Precisely. Let's go back to Maya's big decision. That VP role offer at the high-growth, high-risk startup.
Right. Big potential payoff, but also volatility.
She didn't just ask one person for advice. She ran the opportunity through the entire integrated PBOD gauntlet.
Okay, how did that play out?
Her industry advisor analyzed the startup's market position, competitive threats, trajectory risk. The financial advisor didn't just glance at the salary, they did a deep dive on the equity package.
Looking at vesting, dilution risk, tax implications.
Exactly, way beyond standard financial advice. Then the business advisor assessed the startup's operational model. Did it look scalable? Was the cash burn rate realistic? Did the role have the resources it needed?
Preventing her from walking into a trap.
Right. Meanwhile, the life strategy advisor focused on the inevitable impact on her work-life balance, helped her define her non-negotiables before accepting, things to build into the contract,
And the network advisor.
provided crucial back-channel intel, introduced her to current and former employees of that specific startup, giving Maya unfiltered internal perspectives you just can't get otherwise.
Wow. So a true 360-degree view.
Exactly. She could then make the decision to take the role, but not blindly. She went in with eyes wide open, armed with strategies to mitigate every major identified risk, financial, operational, personal.
That kind of integrated, multifaceted guidance, you just can't replicate that flying solo.
Impossible. And that's the power of the system.
Okay, we keep stressing that this has to be systematic, not accidental, but structure takes effort. How do you actually go from, okay, I need this, to having this board in place?
It starts with, honestly, some rigorous self-assessment. Phase 1 begins with the advisor needs assessment. Maya apparently spent the first couple of months really focused just on this.
So not just listing wants, but diagnosing the actual gaps.
Exactly. An objective diagnosis of your critical skill gaps and, crucially, your guidance gaps. Where do you lack the necessary wisdom or perspective?
This sounds like it requires some serious honesty. Facing where you're not competent.
It really does.
Yeah.
It can be uncomfortable.
Mm-hmm.
Maya had to get specific. For career, she identified a lack of political savvy needed for the CMO jump in fintech, plus specific skill gaps. Financial, total absence of a systematic investment strategy beyond just saving. Business, great idea. Zero clue about client acquisition outside her corporate job.
And personal and network.
Personal, admitting her health and relationships were suffering due to overwork. Network, realizing it was too concentrated in her current company and function, lacking access to senior executives or cross-industry perspectives.
That level of granular self-awareness, that's the starting point.
It's the fuel for the next step, which is the advisor identification strategy.
Yeah.
This took Maya months 3 and 4. Again, no relying on chance encounters at conferences.
This is about targeted research,
Right.
like scouting.
It's exactly like scouting. She used specific research channels. Detailed LinkedIn analysis was key, looking for people matching her target profiles and seeing if they actively shared valuable content, which suggests they might be open to guiding others.
What else?
She cross-referenced LinkedIn with speaker lists from major industry conferences over the past few years, who were the respected repeat speakers. She also mined her university alumni network data, looking specifically for people who'd hit significant milestones 5–10 years prior.
Demonstrating sustained success.
Right. And she applied really strict qualification criteria. Did they have proven success in the exact domain she needed help? Were they even accessible? Did they have mutual connections? Or were they active somewhere she could realistically engage? Did they seem to actively share knowledge?
And you mentioned values alignment earlier.
Crucial,
Yeah.
especially for the life strategy advisor. Were their public actions and statements aligned with the kind of balance and integrity she aspired to? This filtering is vital. You're looking for high-yield targets, not just anyone successful.
Okay. Needs assessed, targets identified. Now comes the hard part, where you said most people fail.
Yes. Months 5 and 6. Strategic relationship building. This is all about the value-first principle. You absolutely must earn the right to their wisdom. You cannot lead with an ask for advice.
You have to give before you get. So how did Maya actually do that? Let's get specific.
Okay. Take her target industry advisor, the SVP. She didn't just send a love your work email after the conference. She listened. When the advisor mentioned a challenge with European market expansion in a panel.
Maya saw an opportunity.
Exactly. She spent 3 weeks putting together a concise, high-quality research brief, competitor moves, potential regulatory hurdles in key EU markets, stuff that was immediately useful for the advisor's team.
And she just sent it. No strings attached.
Delivered it professionally, framed as, thought you might find this useful based on your comments. No expectation of anything in return, building goodwill and demonstrating competence.
Okay. What about the financial advisor cultivation, the angel investor?
Different approach needed there. Maya knew the investor was running a small, new fund. So she leveraged her marketing expertise. She offered a high-level audit of the fund's online presence and gave 3 specific, actionable strategies to attract the right kind of investors, high-net-worth LPs, using sophisticated digital marketing.
Ah, a direct trade of her unique skill for their potential future guidance.
Precisely. She delivered tangible value first, built trust through competence.
And the business advisor, the consultant in health tech.
That relationship was cemented through pro bono work. Maya learned the advisor was struggling with a specific client project that needed some niche digital marketing integration.
So Maya stepped in.
Offered 2 weeks of focused pro bono consulting. She not only solved the immediate problem flawlessly, but went above and beyond, suggesting ways to optimize the client's longer-term strategy. She demonstrated results, saved the advisor time, and probably some stress.
The pattern is crystal clear. Find a way to provide genuine, high-level value based on your unique skills and insights.
Exactly. High-level advisors are drowning in requests but starved for time, niche expertise they don't possess, and reliable execution. Your currency is offering proprietary insights or strategic assistance they actually need.
Do that consistently over months without asking for anything.
And the door to receiving their strategic guidance naturally starts to open. You've earned it.
Okay, so Maya put in the work. She built the relationships across the 5 domains, value first. Now what? Phase 2 is about putting the board to work.
Exactly. Months 7 through 12 were about systematic advisory activation. This is where you start seeing those tangible, measurable results we talked about, where the integrated power of the board really shows up.
Let's revisit that career decision example, the VP role at the fintech startup. She got the offer. What did activation look like?
Not just mulling it over alone. She immediately engaged her PBOD using a structured approach.
So the industry advisor.
Provided that analysis of the startup's competitive position, their likely runway, potential pitfalls in that specific market niche.
And the financial advisor went deep on the equity.
Full deep dive. Calculated the real potential value of the stock options under different scenarios: IPO, acquisition, failure. Looked at dilution risks, vesting schedules, and crucially, advised on specific tax mitigation strategies for that type of compensation. That's specialist knowledge.
Way beyond what her accountant might offer.
Absolutely. Then the business advisor looked at it operationally. Did the role actually have the budget and team support needed to succeed? Or was it a title without resources?
Avoiding the glass cliff scenario.
Right. And the life strategy advisor helped her negotiate specific things like remote work days and define clear success metrics that would allow her to protect her personal boundaries in what was bound to be a high-pressure startup environment.
So the outcome wasn't just take the job or don't take the job.
No. The result was a confident decision to accept, but armed with better negotiation terms up front and pre-built strategies to manage the financial risks, the operational challenges, and the personal well-being aspects. It's about executing with maximum foresight.
Okay. And we saw a similar pattern with the investment decision example.
Yeah.
Deploying that $50,000.
Yes. She didn't just get a stock tip. She received a proper education on systematic strategy. The financial advisor walked her through portfolio theory, diversification. The business advisor added perspective, comparing the risks and scalability of investing in, say, commercial real estate versus venture funds versus index funds. Holistic guidance.
And the business launch example for her consulting side hustle?
That went from just an idea to actually generating revenue pretty quickly because of the board. The business advisor gave her a step-by-step launch checklist, advice on defining a minimum viable service, and how to position it.
And the industry advisor even helped with a client.
Provided a direct referral to a high-potential first client. The result? Maya was generating $2,000 a month within 6 months, alongside her main job. Rapid, risk-managed progress, directly attributable to structured guidance.
Incredible results. But these relationships need tending, right? It's not a one-time activation.
Absolutely not. That brings us to the advisory relationship development process. It has to be ongoing, continuous, and always anchored in that value-first model.
So phase 1, as we covered, is all about delivering value consistently. Research, intros, pro bono help. Never leading with an ask.
Then comes phase 2, trust and credibility development. This is about demonstrating reliability, following through meticulously, maintaining confidentiality. But the absolute key here,
What's that?
reporting back on implemented advice. It sounds simple, but it's powerful.
So when an advisor gives advice,
Maya would follow up maybe a few weeks or a month later with a concise update. Just wanted to let you know I implemented the strategy you suggested regarding X. Here were the initial results, and here's the next challenge that surfaced. Thanks again.
closing the loop.
Yeah.
It shows you valued the advice, took action, and it had an impact.
Exactly. It reinforces their willingness to help again because they see their time wasn't wasted and actually made a difference. It builds massive credibility.
Okay. And phase 3 is the systematic advisory activation itself, which needs to be professional. You mentioned a framework.
Yes, the advisory request framework. Every time Maya needed specific input from her board, her request was structured. It included One, the specific context, briefly. Two, the clear question, hitting their unique expertise, not asking something generic.
3, mentioning the previous independent research she'd already done.
Crucial. Shows you respect their time and haven't come unprepared. 4, a reasonable time frame. Could I get your thoughts by Friday? And 5, a commitment to follow up, letting them know you'll report back on the outcome.
It treats their time like the precious asset it is.
It absolutely has to. And this whole system is sustained by the reciprocal value model. Maya didn't stop providing value just because she was now getting advice.
She kept contributing.
Consistently. Maybe quarterly market insight emails tailored to their interests, making valuable introductions for them, offering quick analysis if they had a question about something in her area of expertise. It's a continuous mutual exchange.
Okay, so the board is built, activated, and maintained. How do you optimize its use? You can't run every little thing by them.
Exactly. You need the advisory board optimization system. And the core of that is having a filter. Mao used the advisory decision framework to distinguish between high-value and low-value decisions.
What qualifies as high value?
Think irreversible choices, big career change,
Yeah.
major investment, launching that business, decisions far outside your core expertise, opportunities where that advisor's specific network is the only way in, or really complex situations needing multiple perspectives to de-risk.
Things with long-term significant consequences, those are reserved for the PBD.
Right, and low-value advisory requests. Those are things like routine operational stuff. Should I hire an intern? Information you could easily find yourself with a bit of research. What's the standard market rate for this service? Or super urgent things that just can't wait for a structured conversation.
Bringing low-value stuff to them erodes trust fast.
Very fast. You also need meeting optimization. Every interaction needs preparation. Clear agenda sent beforehand. Your own research done. Keep the discussion focused, time-bounded, maybe 20 minutes max. Listen intently, summarize actions, follow up immediately. Professionalism matters.
And finally, you mentioned portfolio management. Treating the board like investments.
Yeah, you need to manage it actively. That means relationship diversification. Ensure you have a mix industry insiders for political reality, outsiders for disruptive thinking, maybe different demographics to avoid groupthink.
And performance assessment.
Regularly, maybe quarterly or semi-annually, evaluate which relationships are providing the most measurable value against your current strategic goals. And just as importantly, identify any new guidance gaps that have emerged as your needs evolve. Your board isn't static. It needs to adapt with you.
Okay, we've covered the what and the how of building and using the board, but let's tackle that huge initial hurdle. Actually getting access to these busy, successful people in the first place. Their time is incredibly guarded.
It absolutely is. You need specific strategies. Maya relied heavily on the warm introduction strategy, but executed systematically.
It starts with mapping.
Yes, the network mapping process. Identify your ideal target advisor. Then meticulously chart every possible connection path to them through your existing network LinkedIn connections, former colleagues, alumni contacts. You want to find the strongest, most respected mutual link.
And when you approach that mutual contact for the intro, you can't just say, "Can you intro me?"
No, that rarely works for high-level asks. You need the introduction request framework. When you ask your contact, you give them everything they need to make the intro easy and compelling for the target advisor.
What does that include?
4 key things for your mutual contact. 1, specific context. I'm evaluating a complex M&A opportunity and need insight on X. 2, the clear decision or challenge. I need to understand the specific valuation risk. 3, the time requested. Crucially, keep it small, like would they be open to a brief 20-minute virtual coffee?
And the fourth P.
The specific value offered in return. This is vital. In exchange for their time, I can offer them my analysis on relevant topic Y, which might be useful for their work.
So even the intro request leads with value and respects their time. Much higher chance of success.
Significantly higher. It shows you're serious, prepared, and thinking reciprocally from the very start.
Okay, what about other access routes? Conferences.
The conference and event strategy, yes, but not just attending. Maya treated conferences like targeted research missions.
How so?
Research speakers meticulously beforehand. Prepare thoughtful Q&A questions, ones that show you've engaged with their work deeply, not something easily Googled. Then, the critical step, follow up within 48 hours.
And the follow-up isn't just nice talk.
Absolutely not. The follow-up needs to provide value, maybe a link to a highly relevant article they might have missed, or even better, a specific actionable offer to help with a challenge they mentioned in their talk or Q&A.
So remember the core principle. Advisory relationship building is systematic value exchange. Identify your value, offer it generously, and earn your way onto that accelerated path.
Well said. Thanks for diving deep with us today.